What's going on, everyone? Welcome back. Patrick here. Moving on to the next example. Now, this example here, it's written out in the PDF file at the beginning of the section, so you can print that out. You don't have to write all this out. And if you're watching this on YouTube, there's a link in the description box to the course where you can find that PDF file. So, given a company's financial information over here, we have to find the earnings per share from 2020 to 2022. If the proportion of all expenses to revenue is the same as 2019. And then in addition to that, we have to find the EPS if the company repurchases 30,000 shares each year starting in 2020. So it's like two questions, part A and part B. In both, we're going to find the EPS, how it changes. So notice we're given a company's income statement here, right, from revenue to net income from 2019 to 2022. All these numbers are in thousands, so like the revenue in 2019 is 400,000. And then we're also given the number of shares outstanding each year, and the number of shares outstanding is consistent. However, in that second question, they're going to change because we're going to be repurchasing shares. But for the first part, they're going to stay consistent. Now, what we have to do is we have to find the earnings per share. Now, what is earnings per share? It's basically the total net income or the earnings of a company over the number of shares outstanding. And so if you think about it, really what we have to do is we have to take these numbers here and divide them by those numbers. However, before doing that, we're told that the proportion of expenses to revenue has to be the same as 2019. And notice right now, it's not the same. So for example, if we look at cost of goods sold, if you look at the proportion of cost of goods sold to revenue for 2019, 272 divided by 400, that would be 0.68. But then, if you take, for 2020, 316, the cost of goods sold, divided by 490, you're not going to get 0.68. You're going to get like 0.65 about. So the proportions are different. And so what we have to do first is we have to make sure that all these expenses here on the income statement, so the cost of goods sold, the admin expenses, the interest, the tax, is the same proportion to revenue as it is in 2019. And in fact, what's key about this question is they're saying that all the expenses are the same proportion to revenue as 2019. And so really, we actually don't have to get all of the expenses, write out all the expenses. We can just find the proportion of net income to revenue, the net profit margin for 2019, and then we can apply that to the revenues for 2020 to 2022. Okay, because the net income is also going to be in proportion the same way. So for example, to kind of show you this in a more simple example, let's say that there's $10 of revenue, and let's say there's two sets of expenses. Let's say it's 2 and 5. Right? So 10 minus 2 minus 5 would give us 3. So that would be the net income. So this is revenue, and then these two are expenses. Now, if we proportion them out, notice 2 divided by 10, that gives us 20%. 5 divided by 10 gives us 50%. And then 3 divided by 10 gives us 30%. Now, let's say in a future year, the revenue is 20. And if we keep these same percentages, let's actually just forget about net income. Let's just look at the expenses. 20% of 20 would be 4. 50% of 20 would be 10. And then when we subtract these, 20 minus 4 minus 10, we would end up getting 6. And then notice 6 divided by 20 is still that 30%. And remember, really all we need is the net income. We don't need the other expenses because we're finding the earnings per share. And so instead of finding these expenses here, we can just go straight into finding that net income. So since we know from this year that 3 over 10, the net profit margin is 30%, we can just apply that 30% here to the 20. 20 times 30% would give us 6. We don't have to do all the work in finding the expenses in between. So that's what I'm going to do over here. So what I'm going to do, we can actually erase all these expenses except for net income. So let me, just to create some room here, I'm going to put net income over here. And we just need the net income for 2019, which is 54.6. And what I'm going to do is find the net profit margin of this. So the net profit margin for 2019 is going to be the net income for 2019 over the revenue. And when you do that calculation, you would get 0.1365 or 13.65%. I'm going to keep it in decimals because we're going to be multiplying these by that net profit margin. Right? So taking this, multiplying all of these revenues would give us the new net incomes, and that would make sure that all the expenses were in proportion to revenues the same way as it was in 2019. And when you do those calculations, you would get these respective figures over here. I kept it to 3 decimal places, so 66.885, 72.345, 81.9. Right? When we took these revenue amounts, multiplied it by that net profit margin. So these are the new net incomes if that proportion of expenses to revenue stayed the same as 2019. And then we have these shares outstanding. Let me rewrite those over here. So we kind of go in order, make it organized. So we have the shares outstanding, and each year they are 320. Now we're only finding the EPS for 2020 to 2022. So all we would do at this point, really easy, is we would take these new net incomes and divide it by the number of shares outstanding, by the 320. And after doing that calculation, these are the earnings per shares that you would get for those respective years. I rounded it to the nearest cent to 2 decimal places. So 0.21, 0.23, and then 0.26. So that's the answer right there for the first part. Now the second part says, what if the company repurchases 30,000 shares each year starting in 2020? How is that going to change things? Well, we know a share repurchase brings the shares outstanding down. And so if they start in 2020, 30,000 shares, well, 320,000 minus 30,000 would give us 290,000. And then this minus 30, it's each year, right? So this would be 260, and then this would be 230, right? So that's the only thing that is changing in the EPS calculation, that denominator. The net incomes are still staying the same. And when doing those calculations, here are the values you would get. So 23 cents, 28 cents, and then 36 cents per share respectively. All right, and that's pretty much it for the question. So if you get a question like this where they're keeping that same proportion of expenses to revenue in terms of a certain baseline year for all the future years, you don't have to find all of the expenses unless they're asking you for the whole income statement. If they're asking for something like earnings per share, like in this question, you can just go straight into finding that net income using that net profit margin because it's going to be the same for every year as well. And then once you get that, get the shares outstanding, and then you get the earnings per share.